Well, homebuilder stocks are rebounding today after Commerce Secretary Howard Lutnick hinted that President Trump could offer some exemptions on tariffs. Investors likely hoping for carve-outs for the lumber industry. We heard from Jim Tobin, the CEO of the National Association of Homebuilders, about the potential impact.
We get 30% of our lumber from Canada, and that will certainly crimp our ability to build more houses, but build those houses affordably. Everything is starting to impact, again, tariffs and immigration policy are really starting to squeeze every market in this country.
Joining me now on this, Logan Mohtashami, a lead analyst at HousingWire. Logan, great to speak with you. How are you seeing tariffs potentially impacting home prices?
I don't think the builders have the margins to really push prices too much higher right now. With rates elevated, I think their concern is, they're not going to be building a lot of homes. And it's different. When COVID happened, lumber prices were $1,000 higher than where they are today, but mortgage rates were at 3%. So the increase we've seen in lumber prices already in the last few weeks is anticipating tariffs and duties and what traditionally we deal with lumber pricing. But the builders' active inventory is up, completed units are up. The South is a problem for them. So I don't see them really pushing the prices too much on the consumer now. But I do see this as, they're not going to be building a lot of permits with rates elevated right now. And this just hampers the future production of housing in this kind of environment. This is one of the reasons why the White House wants lower mortgage rates as well.
So then that's interesting. Where do you see home prices going in the near term versus long term?
Now, the existing home sales market, if tariffs and the economy slows down, we reduce spending, we fire people, 10-year yield goes lower, that helps pricing, right? It's really rare in America post-World War II for nominal home prices to fall, but we do see pricing softness when rates are elevated. So to me, it's more of a rate story for the existing home sales market. For the builders, it's a supply and margin story right now. And they were not happy about anything talking about tariffs. And this is why if you look at the Builders Confidence Index, the last 2 months has had one of the biggest drops in looking out forward 6 months. And you could see this higher rates and tariffs does not help them build a lot of homes in the future.
So if you are looking for a home right now and you've been hoping for interest rates to come down to make it more affordable, should you go ahead and buy as soon as possible?
I mean, but if you're looking for a house right now and you've done the pre-qualification, then you're pretty much legit where you're looking to buy, whether rates are up a quarter or down a quarter. But if the economy gets weaker, right? If tariffs actually bring the economy growth slower, then bond yields can go down and mortgage rates go down. I think this is one of the reasons why the White House and Treasury Secretary Bassett, they are very, very active on trying to get mortgage rates lower because it alleviates some of the concern of tariffs and higher costs out there. But in this case, mortgage rates have been hovering back and forth for a few years now. Yeah. It's really rare to even get under 6% since 2022. So you're dealing with a housing market that's very unaffordable. And the builders are also very stressed right now with rates elevated. And on top of this, the tariffs coming in, it just hurts their margin ability.
Yeah, and we haven't even talked about the potential impact of immigration policy, but I want to talk about first-time home buyers in particular, because one of the challenges, as you know, is that there isn't enough supply of those single-family, smaller homes for starter first-time home buyers. What's your outlook for those smaller homes? Do you anticipate more of that supply coming into the market?
I always ask everyone, what does an affordable house look like? Like really, it's really, it has to be a condo or a townhouse, but then that marketplace is getting hit with insurance costs and right. HOA costs are rising. So the supply of the condo market is actually faster than the single family market. So you're not getting any relief there, but because they are smaller than single families, they tend to be priced much lower. So if you're looking in that kind of starter home, townhome, condo, the difficulty is the HOAs are increasing. So you're not getting much relief in the total payment there as well.
Is the ROI there on a townhouse, a condo? Is that return there for people who see it as an opportunity to have an investment in a property where they're not throwing away rent every month and they can sell it someday?
Housing is a cost of shelter to your own capacity to own the debt. I think traditionally home buyers tend to make more money than renters. So you have millions of people buying homes each year, But the HOA condo market is much different now than it in the previous years, especially we see the stress in Florida. Can you get insurance? Can the condo project even get approved? Can you even get a mortgage? Some people have a very hard time selling their homes to anybody with a mortgage buyer. So there is stress in that marketplace. But for the kind of the first-time home buyer that doesn't make a lot of money, that would be one avenue to deal with housing inflation. But again, the HOA costs increasing makes that a little bit less more affordable than it has in the past few years.
Yeah. All right, Logan, great breakdown as always. Thanks so much for joining us.
My pleasure.